Everyone is chasing gold, but this market made me left my old broker for a reason. And in this video, I'm going to show you and tell you what those reasons are. But most importantly, I'm going to show you why this is one of my top pairs and how you can capitalize off of this as well to scale and grow any account that you're dealing with. And if you don't know who I am, I go by Solo ETV, and on my YouTube channel, I take small accounts and flip them large. We even did a $4,000 account to $40,000 via YouTube live stream. And I'm currently doing it all in my community, and also currently showing you guys a lot of the strategies and concepts here on my YouTube channel. So if you haven't already, do me one huge favor. Make sure you comment to say that you want me to drop more like this, like and subscribe. Now let's go ahead and get to it. Now, HankoTrade might have been a broker you might be aware of or know about, but one of the biggest reasons why I actually left this is due to a lot of glitches they had constantly in their system. If you look here on the Discord, as I'm subscribed to the Discord, there's always some type of bug that is constantly happening, and that affects my trading, and I don't like that. So that being said, since they have their own platform, which is HankoTrade, which puts a lot of limitations towards what you can do, that kind of also put a limitation towards what I was able to do. So now that's exactly why I now went over to GatesFX, just because there's a lot of few things that they offer. One, they offer leverage up to 1 to 1,000. That's one other big bonus. Another thing is they have the ability for you to use MT5, which I currently have MT5 just because I've been grandfathered in with them for when they was accepting it with the USA clients. And then also they have Tradelocker. Now, another thing that's really good about Tradelocker is there's this risk calculator that automatically does it for you. So if I'm here telling you risk 4% per trade, it's going to automatically set your stop loss, set your TP for you. So you don't have to go and find a calculator to figure it out in your head. You can literally do it all in Tradelocker, which makes all of our lives 20 times easier when it comes to building an account. So that's exactly one of the biggest reasons why I went with GatesFX. Let's go ahead, talk about the strategy, talk about the concept so you guys can fully understand how this works for you and how you can scale. So I'm going to be showing you guys one of my favorites, which is USOIL. And the reason is because this thing can make you 200 points to 300 points in literally one session without it being too manipulated like gold. Meaning if you're somebody that loves gold, then that's fine. But if you're somebody that's like, I hate gold because it always spikes me out, this is a pair for you because it moves consistently one direction. So if I give you an example, you see that we had a liquidity grab here as well as here, but the moment after that, it just dropped. Also, if you pay close attention to over here, it just dropped. So the nice thing about these plays that's happening that you're seeing in the charts is it's consistent. It's slower, but it's consistent. A lot of traders probably don't like that. They have to wait time to get into a setup or wait for a couple hours for a play to happen. But for some traders, that might be fine. For me, I'm vice versa. But I prefer to know if I know I'm going to get something consistent and it's going to be a little bit slower, I'm fucking fine with it. And that is exactly why I teach how to trade oil so much. So if you look at oil, you see, like I said, this is a setup that we was able to catch. I'm gonna explain to you and show you how to really scale and grow your account off of this. So step one, you want to identify the New York open trap. How I usually do it is you want to mark out what we call our previous days highs and our previous days lows. At New York open, watch for a quick spike above/below one of these levels. This is the liquidity sweep where most traders get trapped. So if you look at this prime example here, you see that we had our daily high and our daily low, which was daily high, and then we also had our daily low. And all we're waiting for is literally to see which direction it wants to sweep. And then from there, we're gonna move on to step two. Now, step two, you want to measure the pullback. So how you measure the pullback, here's the steps. After the sweep, pull your fibs from the swing to swing, meaning the swing high and the swing low. Wait for price to retrace into the fibs 44% to 618 Fibonacci golden zone levels. Only take entries in line with the sweep direction. Swept high, shorts, swept low, longs. So if the market was to sweep the daily highs, short it. If the market was to sweep the daily lows, long it. So here's a prime example of what I was referring to. This is our swing right here, and this is also our swing right here. So this is what we call our internal structure, and this is what we call external structure. So if you look and if we draw our fibs from swing high to swing low, we now know where our 44% mark at, which would be the 618, could potentially be right here. Once we now seen that this is the play, we get ready for our initial setup. This is a prime example of what I said. You have your swing. If you pay close attention, when I draw up my fibs from this high to this low, you see that our 44% mark is here. Prime example of what you should be looking for. Now, after that, we move on to step three. Step three is confirm with a candle behavior. Look for an engulfing candle known as also a displacement candle or a strong rejection wick at your fib zone. One thing that you have to understand is when you're trading with the fibs, once you see that 44% mark, anything in that 44 to 618 is going to be a valid key point for you. If you're trading fair value gaps, if you're trading supply demand, if you're trading institutional levels, POIs, order blocks, and so forth, you're looking for market to tap into that level. That is going to be your valid structural levels that you can validate for market to tap into. Everything else is just going to be extra noise that you do not need to worry about. Volume spikes equals extra confirmations. The more spikes you get, the more better is going to be a stronger play to your direction. One big important thing is place your stop loss above or below the sweep point. Now, if you are trading it based off of a wick, just like what you're seeing right here, you see that market has swing high, swing low, and then we tapped into this area here. We also had a wick here, then we tapped into this, then we eventually got our bearish engulfing candle. You can do one or two things. You can put your stops just above here, or you can do what we do is I put my stops 7 to 8 pips above my entry candle, which is right there, and then I'm entering it right here. Reason being is because you just have a tighter stop, and that's really it. Let me show you guys how that looks in the chart. As you see, here's a prime example of the setup. Notice that we had swings. We also had our Fibonacci. We tapped above the 44. Anything above that, I'm looking as a important level. We had it right here. We didn't even fulfill all of it, but we tapped in there perfectly. Now after that, I seen we got an engulfing candle. This move right here is your entry, and also this move right here is potentially your entry if you missed out on this opportunity. Even this move right here could have been your entry, but just because of this simple fact that it barely got in there, you probably would have got stopped out if you would have followed the 10 to 7 pip rule that we follow. But regardless, we had a play right here that ended up playing very well, and also here. Nice thing about my rule book is I like to say 2 L's straight and I'm out the market. So if I was to get in that setup and then I got an L, I get in again, and if it was to go in my favor, we're good. But if I was to get another L, that means the market is not playing in my favor. So that's important for you guys to understand when you're trading. Now let's go into the most important part, which is step 4 of setting your targets. Where and how would you know when to exit the trade? So there's 2 ways, and there's confluences that you can add. Steps: use a fib extension to project your target points. Your first target should at least line with the -27 and or equal to 1.2 RR. So what I mean by that is if we were to go back to the charts and I was to draw out my fibs from this swing to this swing, and wherever my -27 is at, assuming that it aligns with my 1 to 2 based from my entry. So if we had entered here, stop loss just a couple pips above that, which is this wick here, and I'm at least getting a 1 to 2 from this -27 mark, which is exactly a 1 to 2, so 2.5. That means this is a go-getter trade. Also, if you want an optional trade, I usually always say 1 to 3s for oil is better, just due to the fact it makes way more sense based off of my strategies and my concepts. If you wanted to ride to 1 to 3, try to make sure the fibs align with that as well. And the reason why we use the fibs to match our RRs, because I say this all the time. If you look left, a lot of times traders don't understand what fair value gap or supply demand level is valid. Well, 9 times out of 10, your Fibonacci is going to be your golden ticket to knowing which levels you should actually pay attention to. Because if you look now, you see how strong this level has been holding since we are going, all the way back in July. We can even go further. But you see how strong it's been holding. So for me as a trader, if I'm going to be trading this, I know that -27 and -618, there's some type of valid level there without me needing to do all this extra work that a lot of y'all do and want to do, which is fine. If you just use the Fibonacci and play it like how I'm teaching it, you can make essentially way more profits and catch way more profits, or based off of that method, because you are literally getting in a valid level and you're getting out once it hits a valid level. And that is all what it is for that. Now let's talk about step 5, which is why I decided to choose going with GatesFX. So essentially with oil, Hanko probably had one of the best pricing when it came to it compared to what I was seeing. I know that you guys trade, I'm in the USA, so I know you guys trade IC markets. Basically averaging from 4 to 8 points, which basically 40 to 80 bucks cost on a 1 lot trade. But with Gates, you're averaging 2 to 3 points, equaling to 20 to 30 costs. And also, once again, I don't have to fucking worry about glitches. I can trade with MT5 for one, that's super big. But most importantly, I can trade with Tradelocker, which is the main factor here, because if I'm like, look, I want to risk 4 to 5% for this trade, I'm able to do that with GatesFX because they use Tradelocker. And it's been a minute since I used Tradelocker, since I've been with the HankoX platform, but the HankoX platform just been really glitchy lately, and I hope it can be better later down the road. So that being said, if you guys are interested in getting a sign-on bonus with GatesFX, they are running that deal with Tradelocker directly. So you just deposit like $1,000, and when you do that, you'll be able to get another additional $1,000, which gives you more money to trade. That being said, man, I really appreciate y'all. If you want more about what we do in our TWS community, you can tune in by either doing option A or option B. Option A gives you the ability to join for free by just signing up through the broker we are using. Option B, if you already have one and you're fine with it, okay, all well, you get a 7-day free trial, and after that, there will be that monthly subscription that you would pay. But once again, on TWS, we have all of the videos for you to learn everything about what we do, how to grow, and how to build, and how to follow a fucking system. And on top of that, I go live twice a week, so you guys can tune in with me when we do trade and lock in from there. So if you want that, tradewithsolo.com. Other than that, your boy Solo, I'm out. Peace.